Hello, this is Kurt Cambier from Centennial Capital Partners. I come to you today with the third quarter review and the fourth quarter outlook of 2023. I'm also here with my son Cameron. Cameron will be talking shortly after me about a subject that I think is pretty important right now. I hope you enjoy these videos that we do. We put some time and effort into putting them together and try to pass information on to as many people as we can. And if you'd like to, please share this with your friends. Well, I think right now the market is behaving exactly the way we thought it would behave. The second year, which was last year, the presidential cycle was always the worst year, and boy, was it a bad year. One of the worst years ever in bonds, one of the worst years ever in stocks. It was just a time period where the money was changing, government was raising interest rates, and everything kind of pulled back. Tough place to make any money, tough place to be invested. It required one thing to make money. It requires patience. And now we're in the third year of the presidential cycle, which is always a great year. And it's never been negative since 1946. And so far, we're on a pretty good pace this year. August and September, if you watched the last videos we did in the last quarter, we said we'd be pretty tough. They've been pretty tough. We said the market would begin to rally about now. It's beginning to rally about now. So the market's not really acting that abnormally, although we have a lot of abnormal conditions, right? We have interest rates going up quite a bit, and for the reference point, I think the Fed's probably gone too far already. But I think they're probably done raising interest rates. I think part of that is the spike in bond yields, which is kind of the cost of money. It's temporary, but it went up, and that kind of took some of the zip out of the economy. And some of the side events, like the unfortunate event where Hamas came into Israel and killed, slaughtered a lot of unfortunate people. And those are very difficult long-term circumstances I'm not going to get into. But that's a side one we have to deal with. We have great political turmoil in this country. Honestly, we probably lack leadership all the way across the board in both parties at this particular time. So I hope something being election year next year emerges, and I hope that we unify as a great country that we are. So there's lots of these things that are going to take place. But historically, the end of the year is always a really strong year, and the beginning of the year also is a strong year. A little bit of pullback in February, and then the markets tend to gain strength again your tax season, March and April. So I think that trend is going to be in play, and I think there's opportunities. I also believe we're in a secular bull market, which is a long-term bull market. I'm not the one who feels this. There's some very bright people that I read. I do a lot of reading and feel the same way. And we probably have somewhere between, there's no guarantees of this, of course, because past performance is no guarantee of future results, but we probably have somewhere from 5 to 8 years left in a secular trending bull market. The last legs in a secular bull market, which tend to be 16 to 20-year legs, are always the biggest historically. I don't think this will be any different. And for me, it feels right now like 1995. 1994, we raised interest rates at the fastest pace ever until 2022. The bond market didn't like it. The stock market didn't like it. It was a really tough time period to go through all that. Then what ultimately happened is 1995 came. And what happened in 1995? Pessimism everywhere. I remember it. I was in the business. I've been starting this business in the 1980s. And what happened was new technology came about, the internet. And the internet made things so much more efficient, lowered costs, delivery of services and information sped up. And what did the market do? It had some of the biggest growth it's ever seen, despite the previous year being incredibly terrible. So I think artificial intelligence has the opportunity to do the same thing that the internet did in the late 1990s. So I'm pretty optimistic as we sit here, because I really firmly believe we're in a secular bull market, which means you should stay invested. You shouldn't do radical things, because the biggest thing about this is this quote behind me says, don't make a permanent decision for your temporary motion. You get frustrated because Washington's a mess. You get frustrated because of the turmoil in Ukraine and Europe and Russia. You get really frustrated with the things that are happening in the Middle East and Israel. And that can lead you to making an emotional decision that makes that decision permanent. Those things will be temporary events over time, and we've faced hurdles like this over time. Not the same thing, but to face hurdles like this over time, and we've overcome them. So it's really important to understand that. So the next slide that we have is this. Fear has a far greater grasp on human action than the impressive weight of historical evidence. Fear, we all live with emotions. So many people forget why they're invested. Invest for a time frame. If your time frame is short, you need cash, you need income, whatever it may be, you should be in very low risk, low volatile investments, which today actually have a pretty good yield. But you shouldn't replace that low short-term investments with a decent yield with your longer-term investments, which historically have outperformed, which is what Jeremy Siegel says. Jeremy Siegel is the professor at Wharton University and is very famous, always on TV, has written many great books, Stocks for the Long Run being one, which I've read twice. And Jeremy Siegel says, you know what? Despite all the evidence out there, people still make an emotional decision and make a mistake. When people come to me and tell me, I've been invested, I've never made money in the stock market, I know why. Because they lead with their emotions, not with their logic. So the key thing in everything is patience. And if we go to the next slide, this is the big money is not made in buying and selling, but in waiting. That's from Thomas Phelps. Charlie Munger uses that a lot. He says you don't need to have a fancy trick, you don't need to have a fancy process. You just need to own quality assets and quality companies and wait. One of the analysts that I read often, I get stuff from him every week, is a guy named Jeffrey Sott. Jeffrey is in his 80s. He's been doing this for a long, long time. And I love what he says during the summer. He says, me's just sitting. And sometimes that's the thing to do. You just sit and you wait. You wait for time to help you, because that's how the situation will work. So you need to have assets that are going to grow, even though in the near term they don't look very good, because inflation will be with us in some form for quite some time. And we need to have that superior growth over time. And we know the best long-term growth assets are stocks and real estate. Probably not the best in the short run, but really good in the long run. So those are some of the things. The next one is market volatility. And this is from Warren Buffett. He says, a true investor welcomes volatility, and a wildly fluctuating market means that irrationally low prices will periodically be attached to great companies. So what's that mean? Volatility is not your enemy. Volatility is your friend. Now, if you don't have your investment set up right, and you have a lot of volatility, you need it in the near term, that's your enemy. But if you're not using that money for 5 years or 10 years out, and you got volatility, that's your opportunity. So you've got to put time and risk together on your portfolios. And so the average volatility in the market since 1946, depending upon what measure or what market you're looking at, because there's the S&P, there's the NASDAQ, there's the Dow, is between 0.78% and 0.84%. So that's 78 basis points to 84 basis points. So when the Dow was at 10,000 and you moved 78 basis points, it moved 78 points. Didn't seem like that much. But when it's at 30,000, that's 234 points. And people say to me, oh, dear Lord, the market's so volatile, I can't take it. Believe it or not, this year, market volatility has actually been below normal for most of the year. So it's just the numbers look bigger. So I think if you stay focused on your time horizon, stay focused on the goals of your money and don't mix it up and don't get emotional. Don't let a bad emotion force you into a bad investment decision. Think about the long-term process, because bad days go away, good days will come. And I believe that we're on the verge of having that nice surge that usually comes in the later stages of a secular bull market. So what's going to happen is, Cameron's going to talk next. The word of the day for all of us is going to be patience. Be patient, be understanding, and sometimes you just sit. Anyway, thank you so much. You know how to reach me. It's Kurt Cambier, kurtcambier.com, or you can call 303-271-1067. That's my direct line. Or call the main office, 303-584-1116. So myself, Cameron, the rest of our team would love to help you. Thank you for listening. Please share this information with your friends if you find it available or valuable to you. And I'll have Cameron speak next. Thank you. Appreciate your opportunities. Bye-bye.
Hey everybody, Cameron Cambier here. As always, thank you very much for sticking around to this part of the video and listening to this young buck talk. Number one, happy fall. It's October now. It's my favorite season. And my second favorite season is actually winter. So now you guys know a little fun fact about me and my two favorite seasons, which some of you are like, wow, you like winter? I know, right? Colorado's a pretty good home for me, but I don't like driving in the snow, but I'm starting to get into skiing a little bit more. I like backpacking in the winter, and one of my favorite quotes of all time, as you guys know, I like quotes as my father does, is there's no such thing as bad weather, just improper clothing, all right? But I'm going to piggyback off of a lot of what my dad talked about, guys, and the single word that the kind of the theme of this video is the word patience. And you know, when I think of the word patience, a lot of things come to mind, but I think the most important thing, or the number one thing that comes to my mind, is it sucks. It sucks being patient. I mean, when I think back, I don't think there was a single time in my life where I was like, you know what? I had to be really patient during that time period, and I enjoyed it. I had so much fun being patient. The end result was probably worth it looking back, but the actual process itself of patience isn't very fun, right? It's not very rewarding when you're having to be patient, but usually the reward on the other side is worth all the patience that you had to go through, whether it's you're delayed on a flight getting home after a vacation or a work conference, or you're sitting in a long line at a fast food restaurant, or you're in a long distance relationship with somebody and you're waiting till you can finally see each other in person again. You're doing the Zooms and FaceTimes and phone calls every night. Or you know what, maybe your sports team isn't doing so hot right now, right? So a little bit more on that in a second. But I used a phrase a couple videos ago, and the phrase was, when enthusiasm fails, endurance remains. And I think you can actually replace the word endurance with patience, right? They kind of mean the same thing. So when enthusiasm fails, patience remains. And I'm going to bring our lovely Denver Broncos into this conversation. For those of you who don't know, I'm a huge Denver sports fan. I like the Broncos, the Avalanche, the Nuggets, and the Rockies, probably in that order. And right now, the Broncos stink. They're not doing very well for a whole lot of reasons. We've had to be, as a fan base, very patient with them, especially since we've won the Super Bowl in 2015. But I'm going to take us back even before we won the Super Bowl. I'm going to take us back to the year of 2013. And you know what? The Denver Broncos were not doing bad then. We had Peyton Manning. We had the best offense of all time up to that point. Actually, I think there's still a lot of major categories they would still be relevant in being called the greatest offense of all time. And we were putting 40 plus points by halftime some of the games. The game was over at halftime. And everybody was so enthusiastic around Denver and the Colorado area. It seemed like everywhere you looked, everybody was wearing their orange and blue with pride, and they were talking about it. Everybody was so enthusiastic. And there's a lot of reasons to be enthusiastic that year about the Broncos, right? We looked unstoppable. And we were, until we ran into the Seattle Seahawks in the Super Bowl. And many of us know we got embarrassed that game. They handed our butts to us. It was an embarrassing loss. But what I remember very specifically is it was probably not even a day or two after the Super Bowl. I was in the store, I was buying a shirt or pants or something, and the woman at the checkout line was looking at me, and I was wearing my Bronco hat that day. And she says, "Wow, you're really brave. I would feel embarrassed wearing those colors after what just happened." And I thought two things immediately. Number one, wow, how quick all that enthusiasm just vanished, just like that in one game, one snap really, if we remember how that game unfolded. And I thought to myself, number two, I didn't say this to her face, of course, and I thought, well, you're a fair-weathered fan. Don't be a fair-weathered fan with your sports team, guys, and certainly don't be a fair-weathered fan in investing, because just like in sports, it's really easy to be a fan of the Denver Broncos when they're doing well. It's really easy to put on your hat and your jersey and support and show your pride out there in Colorado, or really across the country or across the world. It's not so easy when the Broncos are in a down area like they are right now, and it's certainly not easy to do it when the market's been down, as my dad said, for almost 2 years straight now. And there's a couple of things, there's a lot of information is passed around these days, and I wanted to create a really important distinction between information and advice, because we listen to it too. We hear it too, right? We listen to the radio, we listen to the TV, we're on the internet, we're consuming this information as well. But please understand that when you guys are listening to the radio, the TV, a podcast, consuming something on the internet like a blog or a article or whatever or whatnot, that's just information. That is not advice. Let's use Dave Ramsey for an example. Okay, what does Dave Ramsey do really, really well? He gives really good, broad information. When he's speaking to thousands of people at the same time, he's not giving advice. Now, when somebody calls into a show and says something like, hey, Dave, thanks for taking my call. I'm in really bad debt. How do I get out of it? Well, how does he typically respond? With follow-up questions like, okay, hey, what's the size of the debt? How did you accumulate it? What are your ages? What are your incomes? What are your goals? He asks all these specific questions so we could give a more advice-oriented answer. But what a lot of people that watch these interactions take place think is, oh, okay, because that's good advice for him or her, it must be good advice for me. Well, maybe, or maybe not. What worked for somebody doesn't work for somebody else. What may work for 99% of people may not work for you. So if you want advice is specific. Number one, give us a call. We'd love to sit down with you and chat and learn more about you, learn more about your situation. If you're current clients, we know a lot about you already, and we can advise you in saying, hey, you know what? That's BS. Don't pay attention to that. Or, you know what? This might have some relevance. Here's an avenue we might want to look at going down. Okay. So that's number one. I wanted to really draw that line of the difference between information and advice. And a lot of people would say, okay, Cam, you know what? That's a good point. That makes a lot of sense. But whether it's information, whether it's advice, I listen to this stuff all day long and it drives me crazy. How can I shield myself from myself, right? And I think the simplest question that pops up into my head is shut off the valve, right? Stop listening to it, stop consuming it. Instead of listening to the radio to and from work every day, maybe put on Spotify, listen to some music, do it, listen to something else that has a completely different subject that doesn't drive you nuts. But I also understand and can sympathize that that's kind of unrealistic, right? That's like my wife coming to me on a Sunday afternoon and being like, Cam, honey, I love you, but you kind of get a little cranky every time you watch the Broncos these days. You should probably just stop watching them. Well, what's going to be my response to her? No, I'm not a fair-weathered fan. So maybe it's unrealistic that we just completely shut off the valve 100%. Number one, I don't want everybody to be living under a rock. It's not safe to do that. You want to be informed. But a really important point, what I think we can all work on is, number one, maybe turning the knob a little bit less, not consuming as much, but more importantly, separating thinking about something and discussing something than actually taking action on it. And I'm going to give an example of when I was back in high school. I played high school basketball, and we had a guy on our team. He was a grade above me. He was a really emotional guy. And something happened in practice one day. This was kind of before the regular season started. We were kind of going through our plays, getting in shape, getting warmed up. And something happened that he didn't like, and you can see it on his face. He was fuming mad. He stormed off the court, and he was walking towards the door, and you could tell he was thinking about doing something. Well, he did end up doing something. He took his fist, and he punched the front door to the gymnasium as hard as he can, stormed out, drove in his car, and went home. And we were thinking, wow, that was pretty intense. Next day, he didn't show up at practice, and we said, hey, coach, where is this guy? And he said, well, when he punched the door with his hand yesterday, he broke his hand. He's probably going to miss most of the year. And so that, I think, is a really, really good example of when people consume this information and they feel like they need to do something. Number one, call us, and we'll talk you through it. We'll talk you off the bridge, as a lot of people say, or off the ledge, off the peg. But you can't, because what I think what that guy was probably thinking at time, he had all this pent up frustration, and he's like, man, I feel like I got to do something. And when his fist initially made contact with that door, probably felt pretty good. And then he started walking through the parking lot, and he's like, oh no, that actually really hurt. And then he went to go see the doctor, and they're like, dude, why'd you do that? You broke your hand. So a lot of times people make that change to alleviate that short-term emotion, and they feel pretty good in the short term, but it hampers and it hurts your long-term outlook. It hurts you as a long-term investor. And one of the greatest things we have today is technology. We're filming this video on a phone. We got the TV behind us. I got a computer over there. But it's not like back in the day. If you wanted to do something, especially with your money, you couldn't just sit on the couch and read something on an article or look at something on the news and be like, oh my gosh, I need to make a change. Pull out your phone. Whew, that was easy, and you felt better about it. No, back in the day, you probably had to get up and walk over to the wall, which is where your phone was. You had to call your financial guy, or you had to actually physically get in your car and go to the bank. Technology is very beneficial, but a lot of times it invokes our worst investment behaviors. So I don't mean to keep blabbering on, guys, but that's what I had for you. Understand that patience sucks. I hate being patient. My dad hates being patient. But it is so stinking important as an investor do not become a prisoner of the moment, okay? Look at the Denver Nuggets. Okay, there was talk before we won the championship last year as, hey, if Mike Malone doesn't get out of the second round, I think we need to can him. How about when Jamal Murray tore his ACL a couple of years ago and he went to Michael Malone the next day and said, hey, I'm really worried you guys are going to trade me because I'm damaged goods. And the Cronkies and Mike Malone, what did they do? They said, no, we believe in you, man. You're down for the moment, but you're not going to stay down. And look how that patience paid off for them. They're world champs right now. We got the best players in the world in our backyard, which is a really, really cool thing. So guys, again, appreciate you sticking around to this part of the video. Appreciate you letting me speak. I really appreciate you continuing to have conversations with me and giving me a call and asking me questions and helping me grow in the business. I learned a lot, and as I said in the last video, I have a long ways to go, but I'm getting smarter by the day. So guys, the website is kcambeer.com. My dad still has it very much ingrained in his mind that it's kurtcambeer.com, but I understand that. But it's kcambeer.com. If you do search kurtcambeer.com, it'll forward over, so don't worry. There's different avenues to get to our main site. And the phone number, which is 303-584-1161. Give us a call. We'd love to help. Please pass this video. I've struggled with this term for whatever reason the past couple of videos, but please pass along this video to anyone who would benefit from the information. We'll talk to you guys next quarter. Stay warm, invest in good clothing, because remember, there's no such thing as bad weather, just improper clothing. Thank you guys for your time and your business. We'll talk to you guys again soon. Take care.